Welcome back to the video for bank reconciliations. And so for the first video, I showed you how to prepare a bank reconciliation based on the balance of a bank statement and based on the balance of the cash account in the books. So now that we've got the bank reconciliation all prepared and our ending balances tie based on our additions and deductions, we're going to go in and perform some journal entries that was not done before. Okay, now these journal entries will only pertain to items that were adjusted, either added or deducted from the from the book side. So anything within the additions or the deductions, we need a journal entry for. Okay, remember that under journal entries for a bank reconciliation, you will either credit or debit cash. Okay, for all your entries. Cash has to be either a credit or a debit, and then the offset will be it'll be based on that, whether cash was deducted for an expense or cash was increased for a note that was collected. So let's go ahead and look at the first one. So under our additions, we had a non-interest bearing note, and this was an addition. So that means that we collected money from a customer that we initially borrowed money to. So let's go ahead, and if we borrowed money to them and they are paying us, let's say a payment, or let's say they have paid in full, we're collecting cash from them. So we're going to debit cash in the amount of whatever we recorded, which is $6,300. Okay, so you're going to debit cash for that, increasing cash. And your offset, okay, let me just make this a little bigger here. Your offset will be to notes receivable. Okay. That notes receivable will be denoted as, let's see if they have it here. It didn't give us the name, so it was a credit memorandum for $6,300, but it didn't give us who the bank collected it from. So let's just say it was notes receivable for $6,300. So as you can see with this transaction, we increased cash because the cash came in for $6,300. We got to record that. And we decreased a receivable account. Okay, someone owes us this money. We are decreasing the amount they owe us with a credit to notes receivable due to the fact that they've already made that payment. So that concludes our additions because that was the only thing under the additions. So let's look at deductions. Looks like we've got two different expenses. We got one for the bank collection and one that was for a customer. Originally, like I said, they sent us a check and now it's NSF. We have to put the money, we have to give back the money to the bank. So what I'm going to do is I'm going to debit bank service charge. This is an expense, so you can add expense to it if you want. That's for $50. And we're going to decrease cash, okay, because they pulled out the $50 from our checking account to pay for this bank service charge. Additionally, we have to make another journal entry for the NSF check from Wilson. So we're going to go ahead and debit an accounts receivable account for Wilson Construction. Okay. If I can spell it. And then credit cash for $61.35. All right. So I just want to explain this just a little bit further. So here is the original entry here. So here's the original entry when Wilson wrote DeSisto a check. When the check arrived at the company DeSisto debited cash for $6,135. Okay, and they credited accounts receivable for Wilson at $61.35. Every time you pay something, hold on here. Okay. Every time you go ahead and submit payment to a company, the company's going to record the cash that came in, and then they're going to reduce your receivable account, okay, for the amount that you paid them. This is exactly what dSisto did. Now that the check came back, what they're doing is they're just basically reversing that, okay? We're putting them, we are increasing his accounts receivable for the $6,135 again, reversing what we deducted before, and then decreasing our cash again for $61.35. So that's the original entry that we did. Since the check came back non-sufficient funds, we're going to put that money, we're going to give that money back to the bank and increase Wilson's accounts receivable again until they make another payment. So that's a roundup of that last entry. Good luck on the homework.